Metro District abuse in Colorado, taxation without representation. What we're going to look at in this segment is one of the principal documents that creates this taxation without representation. That document are the ballot issues that are passed in the first election when the district is created. The first thing they do is have a vote on the board of directors. You'll see there are 5 voters. The voters are the developer, a consultant, and their family members. There are 5 of them. The vote was 5-0. This is standard. You'll see this in every district. The initial voters on this ballot issue are the developer, his employees, and family members. After they vote themselves into office, they get down to the real nitty-gritty, the money. They vote extraordinarily high debt limits, which are imposed on the residents, and they vote to eliminate the right of the residents to approve bond debt and approve taxes. And the people listed here making these decisions, casting these votes, have a conflict of interest with the residents because the tax burden, the tax debt, the bond debt they're imposing on the future residents is going to pay money to these people, to the developers. They have a direct conflict of interest. So let's look at the ballot issues that generate the obligations to pay the money and eliminate the right of the voters to approve it. Here's that ballot issue. No, it's not easy to read. It took me 5 or 6 times to parse it out and figure out what it was saying. Let me try to walk through it. The first part sets the money limits. In this district, Saratoga Falls Metropolitan District number 3, those 5 people with a conflict of interest voted to impose debt on the future residents of up to $20 million with a repayment cost of not more than $140 million. The repayment cost is the principal and the interest when you pay all of this out over 40 to 50 years. Now there are more than one ballot issue, and what they do is they add up all the ballot issues and come up with totals. And the total for the Metropolitan District number 3 is over $200 million in debt with a repayment cost of not more than principal and interest equal to $1.97 billion. This document from the DOLA website confirms the amount. This $219 million is what's left over after they've already issued bond debt. So the bond debt that was issued, those total amounts, are over $200 million of debt on the future residents. Now you will never see this in your closing documents. This will never be posted on the website by the developer. It will never be sent out with any mailings from the developer. And in fact, the city and the county will never see this either. But where does this number come from? A special district attorney representing the industry tried to explain this to the legislators recently during a committee hearing. Here's what she had to say.
Thank you for asking that question. Actually, under Tabor, it is the responsibility of those who are qualified to vote to have the opportunity to vote in the questions that allow taxation and incurrence of debt. And that is what those election questions do at the time of organization. And again, the boundaries of what those numbers are and what those parameters are set forth in the service plan that the city council or county commissioners who are also voted in to elected positions decide is appropriate for that public financing. And so all of that's in place.
So she's saying that the city and the county approved these numbers in the service plan. In essence, over $200 million and 1.97 in repayment costs. Well, let's look at what the service plan says. Here's an excerpt from the amendment to the service plan that shows the limit is $16 million, increased to $25 million with this amendment, not $200 million, not $1.97 billion. So in fact, contrary to what the attorney told the legislatures in a recent hearing, the city and the county do not approve these numbers. They never see them in most cases. And even if they did, they wouldn't know what they are. So how does this happen? Why does it happen? Why do they want this much debt in order to go forward with the Metro District? Well, a couple reasons. One is it gives them a blank check. It basically says we have up to $1.97 billion that we can obligate the residents to pay without ever getting their permission. Here's how they do that. In the second part of the ballot issue, they eliminate the right of the voters to ever vote, to ever approve that debt. First of all, they give themselves 15% interest on those loans and bond debt. And then they say this debt and these taxes will be determined by the district, more specifically the board of directors, which for the at least, well, up to 20 years will be the developer and his employees and family members who have a conflict of interest with the residents. The board of directors with the conflict of interest will be making those decisions as if they were approved by the voters, as a voter-approved revenue. And any limitations in Tabor will be eliminated. And we see that in the bonds that are issued, the bond prospectus. Here's an excerpt from another district. It says to the bond investors, at the 2006 election, the qualified electors for each of the districts voted to issue, in this case, up to $4.9 billion. It was voter authorized. What they don't say is that the people who voted on that bond debt were the developer, his family, and employees. So it gives them a blank check, and there's no accountability. Because they don't have to go back to the voters in order to get approval to issue that bond debt, to impose those taxes to pay the loans and the bond debt, since they don't have to go to the voters to get permission to do that, they essentially have a blank check with no accountability. What did they spend the money on? Did they spend it on our pipes and streets, or did they spend it on pipes and streets in another development? Or did they use it for a European vacation? We don't know. And when residents have asked those questions, the response is frequently blank stares. You won't get the information from us because we're a private corporation, and other non-answers. So, when the developer passes these bonds, there was an expectation on the part of the city and the county that they would comply with Tabor and get permission with accountability from the people actually paying those taxes before the bond debt is issued. But again, in a provision that the city and the county never see, they take away that right from the voters. So, these are the documents that help explain the mechanics, how it happens, disclose that nobody ever sees them, and the way to fix it. The way to fix it is to prohibit these elections from taking place where the only voters have a conflict of interest with the actual residents. You ask yourself, well, why do they do it? Why don't they wait until the residents arrive? And the short answer is, the residents would never approve it. The residents would never vote to give up the right not to approve taxes, not to approve bond debt. The voters would never authorize a blank check to the developer for $1.97 billion. The voters would never approve of paying all this money without some accountability. Have we already paid for these costs when we paid for the developed lot? What is the money actually being spent for? And if we owe it, we'll pay it. And finally, would the residents vote to go through this process and pay interest on interest through the bond debt, paying off loans, when there's a much cheaper way to pay for that cost of infrastructure? The whole point is, this is taxpayer money, and the taxpayers have nothing to say, no opportunity to approve or disapprove these expenditures. And that process, that permission, is the way it operates under the current statutes. We need to change the statutes. We need to amend the statutes to prohibit this kind of abuse. Thank you.